Alright traders, I'm back again with another video. This time I want to talk to you about a few trading opportunities that have developed. And there's 5 pairs we're going to look at, and first we're looking at the pound dollar. Now you can see I was in a trade. I made 17.9 pips right here. And the thing about this trade, this was yesterday, Sunday, the open of the market. I got into a trade. I got into the bounce here off of the 200 period moving average and this resistance level right here. I mean support level. This is a support level because you could see here the market hit here, then it went up, came back down, hit here, went back up besides that level, then came down, hit that same level again. So you could put a line there and you would see that that was a support level that the market was honoring. So I figured the market would bounce off of that level, and when this candle closed off of the bounce of that level, I got in here and I figured I would just take it to this level because I didn't think the market would break out of that box, that range on a Sunday. Usually the market doesn't usually break out of ranges on Sunday. But then I went to bed, and when I woke up, the price was up here. Because I got out here, I set a take profit order right here, and then I just didn't look at it anymore. And when I came to look at it, I already had 17.9 pips, and the market was starting to come back down. So I said, oh, it'll come down and bounce on that level again, and then it'll go, and I'll look forward to break that level maybe today, which is Monday. Well, it broke that level today, Monday, but early in the morning when I got up, it was here. And I don't like to get into the trade there. I want to be as close to the support and resistance level as possible. So I want to get into the trade on the break. Well, when this breaks, I want to try to get a reverse back here. If it's too far for me, I want to get on this level, this fractal level. Fractal levels are support and resistance levels, because look at this fractal here, fractal there, fractal here, fractal here. These are making support and resistance levels, so that would be a resistance level. Down here it's a support level, it's a fractal level, another fractal level, another fractal level. So it's making these support and resistance levels, and when we break those levels we trade. Now I got out of the trade, but I wanted to get back in. If I want to get back in, I either wait for the market to come down here, bounce off of this support level that it made. It will now be support here because it was resistance here. Now we passed it, now it'll be support. So it'll come down, bounce off of that level or close to it, and I can put my stop loss like maybe under this candle, but realistically I want to have it under this level here because I know this is a strong level where the market may not break through. Okay, and then if we can't get off the bounce of this level, the market doesn't pull back that far, we get in off the break of this fractal level here. And you can see that fractal level. It already made a fractal. Fractals do not repaint themselves. This is the fractal level right here. The fractal's not going to repaint. It made the fractal right here because there's 2 fractals. There's one lower and then another lower here. And you're going on these sides. So I'm basing it off of five candles. So 2 candles on each side, and I make the fractal level. Now some software does repaint fractal levels, but this doesn't repaint the fractal level. Once it makes the level, it's the fractal level. Now you look at levels where you want to take your profit, or if you get into the trade on the break of this level, you could see this level here. I can see the support and resistance levels right off the bat because I see these fractal levels. So let's just show where they are. Here's a level right here. Now if we move the chart back, we probably could see that level. You see I made this line here, and I wasn't looking at any of this back here, but if I put that line there, you could see where the market did honor that line even back here. And I just put that line in there and I wasn't even looking back here. Now you see where it came up and it hit here, bounced off, and then it broke, and then it came back and touched it again here, went up and then broke it. But you see back here where it made that level there and came very close to that level, and then it barely broke that level and went back up again. And when it broke it here, it bounced off of it on the bottom here for resistance. So you could see that line. So what you're thinking, if you get into a trade, you want to know that maybe this is where the market's going to bounce off and go back, and that will be your take profit level. Now then what you'll do again is you look for the market to break that level and you get into the trade again. So that's how you just keep trading. And that's how you trade support and resistance levels. Now let's show you the trade that I left this trade to get into. I left that trade and got into this trade. And the reason I got into the trade, now there's a couple things I'm going to show you here. Moving average, we're getting very tight, and it looks like the 100 is going to cross the 200. But you know, don't assume anything. But basically, when we see that happen, we know that this is a bearish market. Okay, right now with the 100 being on top of the 200, it still states that it's a bullish market, but prices underneath of both of those moving averages, so it's a bearish market. The moving averages are lagging indicators. They're not exactly on time with price. Price is the only indicator that is right on time. Okay, so you're looking at price. You see, once price broke through here and closed here, then this was a bearish market. It became bearish. You're under the 200, and you look at this level here. You could see this level here, and what happened? I'm going to put a line there because these are things that you have to start learning to look for as traders. Just look for these levels. Now you'll see that level there. And what did the market do? This level's back here, all this honoring that. So you know that's a level of support. Well, the market bounced there, and then it broke there. And then the market tried to come close to there. Now the reason I got into the trade was this had already happened. But see this fractal level here? It got broken, and I got into the trade here. So here's my distance from that support level. So I knew the market could come all the way back up to here maybe. But then I have to take you even farther to show you something else. Every time I'm doing a video, we get a phone call. The phone rings, so we'll have to deal with that. Now look at this level here. I put Fibonacci retracement levels in here. From this low up to this high, then the market pulled back. It broke the 38.2 retracement level, and then this 50% retracement level is a level that these are support levels, basically support and resistance levels, also Fibonacci levels. So we're looking here at the 61.8. The market made a fractal near that level, and that's where I got into the trade. This could be a support level, and the market might not go through that level, but I based my trade off of this level right here, this immediate level, not the fractal level. So if we break this level and we break through the 61.8, we look good for some downtime to this level or this level here. So we could look down to go to this level here, which is resting at about the 90.95462, or else we'll go down to this level right here, 9508. Okay, so that's why I got into that trade. And now I also know that this is a long candle. I expected the market to retrace, and it did retrace, and now it's starting to come back down. You know the market's going to make moves like this: retrace, come down, retrace, come down, retrace, come down, retrace. That's the flow of the market. Comes down, retraces, comes down, consolidate, retrace, come down, retrace, come down, retrace. And now we're hoping that it comes back down more, and that this wasn't a support level that it's gonna honor and not go back through. So we got in here, this level here, got in here when the market closed, and I knew the market would retrace, so I still wasn't worried. You see my stop loss was above. Usually I like to put it above the wicks, so my stop loss is up here. So if the market retraces past that fractal level, then I know it may be going the other way. Usually the market doesn't retrace to this fractal level. It'll retrace to this fractal level, so it'll retrace right here. It retraced a little deeper, and so now it's coming back down, and we're looking for it to come back down and break this level and keep going. And it'll be even more strength once we see these moving averages cross, and we know that the market's going. We can tell first by price, first of all, and then looking at our indicators that indicate that to us. Okay, so that was the Aussie Swiss franc. Now we're on the Aussie CAD. There's not a trade yet, but there's a couple things I want to show you. You always look for the next fractal level to go to. Now the thing is, I told you don't trade in between the two moving averages. Now the thing that you could do is trade off of the bounce of this 100 or trade off of the break. I don't like to trade between the two moving averages, but when you come back up, if it doesn't break that 100, then you can put an order in, put your stop loss a little above that, and then you can come down and break through there. But now if you wait, you just want to break through the 200 here or break through this fractal level here. Once you close below these levels, then you're good for a long trade. Okay, now if the market goes back up and breaks through this 100, well, then we're looking for it to go the other way. And the reason I tell you that you can trade between here is when it bounces off of the top of one of them. So when it bounces off the top, after it already came through the bottom, goes back up and bounces off of the top, you can take that trade and put your stop order, your stop loss a little bit above there. So you're not risking much at all. And then if the market goes and then it breaks through here, then you can move your stop loss down to the 200, because the market breaks the 200 and then breaks this fractal level, and once it moves, you move your stop loss down to the 200 and you made profit there. And then once it goes, retraces, makes its fractal level, then you move it down to this level, and then you keep following your fractals. But other than that, if the market's in here like this, you don't trade this inside of the moving averages. But the bounce off of the top of this moving average, yes. Now here I wouldn't trade it. I wouldn't trade the bounce here. Hold on, traders. Okay, we bounced off of this 100 right here, and we're looking for the market to break through here. If you don't take this trade here, wait for it to break here or wait for it to break this level. Okay, and you can see again, I'm going to show you real quickly how this support and resistance thing works. If I go by this fractal level right here, watch this. I have this fractal level here. Look at where the market is honoring that level so many times. Look where it's honoring that level. So that's a strong level. If price breaks through there and closes below there, then you know you're good for that trade. But that doesn't mean it's not gonna come back up and bounce off of the moving average and then go back again. Sometimes price could fool around by those support and resistance levels, just like it would have faked you out right here if you didn't have any, if we didn't have the moving average or the cloud here and you thought it broke this level. That's a fake out right there. There to faked you out, but you could have gained a little bit of profit here, but that would have faked you out a little bit. Okay, so you see that level there. Okay, the next one that we're going to look at, that was the Aussie CAD 4-hour time frame, all these charts. The next one is the Euro Aussie 4-hour time frame. Traders, you see where we broke through the 200 moving average, and I showed you the other day we had these trend lines here. Price broke the trend line and closed above it. I told you that it may not break there, it may bounce off of this trend line and come down here and then go. Well, it looks like it's trying to go already because it closed above there. So if you took that trade here, looks like the market is just indecisive yet. But if you took that trade here with a stop loss supposedly down here, you want to be below this this fractal level here. You could be below this moving average, or you could be at this level here. See this fractal level? Here's what the market likes to do, and I've been saying this, comes up, retrace back to this fractal level. So you have your stop loss down here a little bit. Now it may poke through that level and poke down here just to try to take you out and then go. But basically, traders, we broke this level here with this long candle here, broke that trend line, broke that fractal level, and then it closed up here. That was a good area to get into the trade. And like I said, maybe put your stop loss right here, a little bit below this level here. This is the level. Let me put a line there so you could see that level, what I'm looking at. That level is right there. And if I put a stop loss, maybe I put it right there. So the market may come down, touch this level, because here's that strong support level from the fractal, and then I have a stop loss down here below that level. Now if the market comes down to here, then you know you don't want to be in a trade. Even if it really breaks this and comes down here, you don't want to be in a trade. It's indecisive. We want to see it breaking these levels, breaking these levels, breaking these levels. So let's remove these off the chart. So that's the Euro Aussie. That's the 4-hour time frame. And I'm just showing you trading opportunities that are on the horizon right now. Now here's another one. This is the pound Aussie 4-hour time frame. I don't like messing with this pound Aussie that much, but as you can see, we broke this 200 level, the 200 moving average level, and now the market's barely doing anything. Now what we want to see are a couple things. You want to see the market either pull back, touch this 200 moving average, and then go. So you trade off of the bounce of the 200, put a stop loss a little below that 200, or you trade off if it's going to move down here. Once this moves down, if this market moves down, this will be a fractal level, because you'll have this candle. Well, you have this candle, maybe a candle here and another candle, so you'll have a fractal level up here. So if the market breaks that level, then you go. But with these small little moves, and it's very indecisive, I don't really mess with it. I like to see strong levels and then broken levels. So maybe price pulls back to here, we look for that, or the break there. Now sometime price will make a couple candles here like this, not too big, maybe 5, 6 pips, 7 pips each candle, and then it'll make a level here and then go. That's a fractal level, and you can trade that level. Those are the hardest ones to trade because it keeps making levels straight right here, and it doesn't really look like a pullback, and it's hard to judge those and to get into those. So that's what I'm looking at there, and that's all of it. That's everything I'm looking at right now, those 5 pairs, and that's how I'm looking at everything for the whole week. Alright traders, that's about it for me. Hopefully I'm blessing someone, and until next time, God bless.